Hey, welcome back to Two Guys Trade Stocks. I'm Dylan.
I'm Vinny.
And we did a video last week on if the stock market had put in a bottom or if we're ready for a crash. A lot has happened since that video. That was 2 weeks ago, actually. So we're gonna get some updates here on the state of the economy, and I would really like. I put the poll up again. I want to see how many people change their mind. I'll show you the results real quick, but just real quick. Here's the Qs. Long. This is I don't know, year and a half, 2 years. You could see we were under the 200. That's this big blue line. That's the one that this respects so much. And we popped up Horde. Okay? We're like 3 tweets right here. We're 3 Trump tweets, and then boom, jumped up, right? There was tons of tariffs, more tariffs. Okay, maybe not. All right, no tariffs. And then we just had a tweet, okay, some tariffs. So this is really hard to follow. We're in a world where the stock market may change 2 to 3% a day based off of a tweet, right? We just had, hey, by the way, might bring back EU 50% tariffs. Down day. All right, we opened up pretty low. So what I want to know is, what do you guys think? I'm going to throw some other factors in here, some unusual whale tweets that have been circling around and are slightly misleading. But we are above this 200 moving average. This 100 and this 200 moving average are meeting. Do you remember what this is called when they cross?
So if it's a death cross, if the 100 goes over the 200, right?
I think so. And it's like the
Yeah.
golden cross if it's the other one.
Yeah, I think so. If the 100 crosses over the 200, I think
Yeah.
is
And
golden.
then we did a video looking at every time that's ever happened, like over a year ago. Turns
Uh-huh.
out it's right about 55% of the time. So it's not slightly better than a coin toss. Or, I don't
Yes,
remember.
I love
It
it.
was somewhere like 57 or something. But here's the poll. So we had about 200 votes. It was, 25, 75, about 3/4 of people said we will have a new bottom within 12 months. Now, this was about right here. Okay? That's when we released this. So let's
I
go
can't believe we got
back.
200 responses, man. That's amazing. Thank you.
Yeah, that's pretty cool. I
Yeah.
just put up another one. So there's 0, I would assume. I just put up right before we were filming this. But new bottom within 12 months, 77%. And then bottom, not going to happen. We're going to chop or go higher, 23%. So here is some of the stuff that's going around. All right. Now, I feel like I see these headlines all the time. Like, I feel like
Yeah.
this is just one of those things where, so I kind of looked into some of the stuff Unusual Whale says. It's a little bit misleading. For instance, they did a tweet. They just said the auto loan delinquency rate hit 6.6%. I believe they left out subprime, but I'll have to look. It is subprime mortgages that are going very high. What is a subprime mortgage? It is if you are below a 620 credit score, is I believe the one they go for. So this one. And it was only 16% of new loans. All right.
Nice.
So there's a lot of stuff on. Now, don't get me wrong. It's high. That's too high. That's not good.
Yeah.
But we were in a place where this was like 20, 22% of loans, and it's actually going down. So that's very good news. Here's the actual billions of dollars per loan credit score. So there's all these tiers, mid prime, whatever. But 620 is usually your subprime.
Yeah, that's basically no significant volume there as far as dollar amounts compared to
Yeah,
the other ones. It's good.
but the tweet looks scary.
Yeah.
All right. Then, Sears credit card delinquencies has risen to 12.31%, the highest level since 2011. This one's not good. This one's legit. So percentage of people with credit card debt 30 days, and I did 90 days. They had, what was there, 60?
Uh,
Oh, no. They
Usually
didn't even say.
serious delinquency is 90 days, but
Series is 90. You're right. So you can tell, that number it's not the highest income or U.S., but it is when you look at lowest income 10% of zip codes, we're approaching that 15% for 90 days. That's high. That's too high. That is not sustainable, right? That we haven't seen that since 2002, 2003. So that's a problem. That's not
This
good.
is more evidence a ton of people are hurting. I don't, are you going to talk about student loans at all in this presentation? Because I saw it and talked
Kind
about that.
of. It
Okay.
is in here. Boom. There we go.
Yeah.
Now, serious delinquency rates by type of loan. So, obviously, student loans have skyrocketed because we kind of changed what we were doing a little bit.
Yeah.
But skyrocketed. I guess I shouldn't say skyrocketed.
Yeah. It was something like, I think it's 5 million plus borrowers that are like no longer making payments.
Yeah.
And another 4 million that were like close to like serious delinquency levels, I want to say. I saw an article on CBC about it this week. Just crazy to think that, like, I want to say I did the math and it was like 9 million people total, either just simply not paying it, or I've gotten to the point where they're in default or have a serious delinquency, which is, like I said, typically greater than 90 days.
Yeah. It's not
9
good.
million.
I also want to throw this up there because whoever thought it was cool to put 4 shades of green,
Yeah.
why would
Idiot.
you do that? Like
I know.
I'm not colorblind, but I'm right there. This is incredibly difficult for me to read. I don't I can't
Yeah,
it's
I
not
agree.
easy
That's
for me.
silly and frustrating. Screw
Yeah.
you, New York Fed.
I was like, why would you guys do that? All right. Houses, real quick. This one's rough. So 60% of households unable to afford a $300,000 home, and then the average 30-year mortgage rate is now above 7%, as we just saw from Vinny's video. So to get that is using this rule of a 28% rule of mortgage payments, property tax, and insurance limits how much a household can spend on a home. So it's for if you're putting down a down payment and a certain amount of your income, right? Which, to be fair, you should not be exceeding 28% of your total household income. That'd be a lot. It's too much.
Don't be house poor. Yeah, exactly.
Yeah, it's a bad idea. This is the scary chart, right? So this is number of unsold completed homes for sale. Highest level of completed unsold homes since July 2009.
Interesting.
Great. That's what we want to see, right?
Um,
Perfect.
I could see it. I mean, around me, like every new home under construction is 800,000 plus. You know,
Yeah,
I'm
same.
great in the Northeast, but it's just crazy.
I don't
So
know about you. This is off topic, but also the build quality for me in Arizona, the new homes, terrible.
yeah,
Like, oof. There's like a whole thing that just burnt down. Um, you familiar with Klarna, like a firm, all those, right?
Afterpay and all those companies. Yeah,
Yeah. So buy now, pay later, right? Saw its losses double in quarter one after $136 million in customer debts went unpaid. So here's the actual thing that happened. The Swedish payment startup said its net loss for the first 3 months of 2025 totaled 99 million, significantly worse than the 47 million it was a year ago. But it was due to one-off costs related to depreciation, share-based payments, and restructuring. And then I want to show this paragraph here. So first quarter consumer credit losses rose 17%. And then the portion of loans not paid back increased from 0.51 to 0.54% globally. So it's a little bit of a misleading tweet. You're on mute, Vinny.
that's a very misleading tweet
Yeah,
for sure.
a little bit. It was like, all right. I mean, I get it. It's not good, but it's making it sound very different. Um,
Yeah,
so I just want to know how you guys feel about this. If you're still on, hey, bottom is in, or we're going to have a new bottom within 12 months. I know this is a difficult question to ask. A tweet tomorrow could make us go up 8% or down. I don't know. We have no idea.
yeah,
This is a terrifying market. So let us know what you guys think.
yeah. Catch the next one.